And today, Wedbush joins in on the fun, going to $210 per share from $175 ahead of next week's earnings. Part of the reason, an expected rebound in revenue from the Chinese market. So joining me now is the analyst behind that call, Matt Bryson, Wedbush equity research analyst. Matt, it's great to have you back on the show. And let's start right there. Why the hike to the price target?
Yeah, I mean, I think there's a couple of reasons. You mentioned one of them. Certainly, there should be some revenue from China, and we can debate whether it's $1 billion or $8 billion. I think I've been relatively conservative there, but the other pieces are, look, my checks throughout the quarter have been positive. Hearing good things about Blackwell Ultra. You look at the CSPs; they're lifting spend. They've been the single largest market for Nvidia. So you've had a bunch of good news. Nvidia tends to leave a little bit on the table when they give guidance, and so I just don't see any reason that we don't get another beat, and then another strong guide for fiscal Q3.
So the fact that the stock has sold off in these last couple of days, is that a buying opportunity ahead of the print then?
I think that everything looks good for Nvidia. It's always hard to tell exactly how it will trade around the print, but I think the concerns kind of this week have more to do with macro, maybe a bit about the future of AI, given that MIT paper that said something like only 5% of enterprises are really getting value from generative AI. But I think that there is plenty of spend ahead, not only the CSPs, but sovereigns. And so I think NVIDIA is looking good through 2026 at least.
Okay, so in light of that, what do you think of that MIT paper? And then I know there was also there was the Sam Altman AI bubble commentary, which was arguably taken a little bit out of context as well. What do you make of all of that and what it means for the future of spending on AI?
Yeah, so I think part of it is simply figuring out how to use the tech. And to some extent, it's a positive that 5% of enterprises are getting real value out of this, right? That suggests that it's not useful to the other 95% of enterprises, but rather that they just need to figure out how to use generative AI. I think that there's a ton of consumer devices coming out in 26, 27 that are aimed at trying to enable AI for the consumer. So again, something else that will use data center resources. And the tough thing is to figure out exactly when you see that viral application, if you will. But having said that, because we have all this sovereign spend that gets layered on top of the CSP spend, I think there's 18 months for that event to happen before we have to worry that, maybe spend on data center falls short of expectations.
I want to go back to the China piece for NVIDIA specifically, because if I'm recalling correctly, in the last couple of quarters, they basically de-risked the China business, and a lot of that was pulled out of the forecast and the guidance. So do you expect that to be layered back in now, given what we're seeing with these H20 chips, even if there is a 15% cut of sales going back to the U.S. government?
Yeah, so I think there's going to be some revenue from China. I think the real question is, look, NVIDIA was set to do $8 billion in Q2, or at least that's what management thought they were going to do. What's the real level right now? You've got headwinds from that 15%, the export tariff, if you will. You have the Chinese government pushing its companies not to use the H20, but NVIDIA is still going to see some revenue from China. And the real question is it 2 billion? Is it 4 billion? I've been relatively conservative in layering it in. So I only have 1 billion, 2 billion over the next couple of quarters, a little more than that next year when you start to get the Blackwell parts out. But I think it's still a benefit versus where we'd been a quarter ago when it looked like China was going to be zero.